The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And another wonderful day out here. We've got market action, a little bit of news out here about shooting up in Ottawa. And they're doing everything they can to bend over or backwards to not link this to a bunch of shootings and stabbings the last couple of days. Maybe that'll come out here in the next few minutes. But if you haven't been watching the reporting, I guess there's this kind of idea that if we just don't say that Muslim extremists are running around doing bad things, that they won't do bad things. But what can you say? They've been running around shooting, stabbing people for the last couple of days already. Not a big stretch to think that they're up there doing that again today. But we shall see. And I think they're having a press conference right now on it. For those people, I had a office in Markham, Ontario, Canada, and spent every couple of weeks getting on one of the little puddle jumpers and flying up there and getting grilled. For those I'll have to make sure and pull my punches here. For those people of less than ordinary intelligence that ever say anything about the way you're treated or the way we treat people coming into this country, just try to go in on a business meeting into Canada, because I had to do it every 2 weeks. And they didn't treat me like just run across the border and do anything you want. I got grilled every single time I came through, had to prove papers, show a passport, and I don't know what's wrong with asking people to do that. Certainly I had to do it every time I went to Canada. They were massively worried that I'd go up there and do some work, get paid, and come back to America. They are more than willing to dump as many people as they could back into the States. But if you've not been to Toronto or Ontario, a huge Muslim population, and basically you can find their, I want to say churches, but they're not called that. What are they? Maybe someone in the den can say that. I'm just having a mental blank at the moment. But it is a huge Muslim population up there. They were, mosque. And there was one right by our office. I always remembered we'd be in the middle of a conference call, and we'd start hearing the calls for prayer being belted out. And we could hear it inside the building, way deep inside the building. And nothing wrong with Muslims. And the problem, though, is I would imagine that you're probably going to get a few that you don't want when you let anybody in. And I suspect that there's maybe a little bit of second guessing going on in Canada. They certainly, in the last 10 years, rapidly changed their immigration policies up there, from what I hear. But for the most part, not a big deal, but I have a feeling there's a lot of unemployed kids that are probably finding less than optimal people to guide them at those mosques these days. But I digress. On this day in 1962, a televised speech of extraordinary magnitude was given by John Kennedy. Announces that U.S. spy planes have discovered Soviet missile bases in Cuba. These missile sites under construction but nearing completion housed medium-range missiles capable of striking a number of major cities in the United States, including Washington, D.C. And a lot of people give a lot of credit to the way John Kennedy negotiated an end to this. What most people didn't know is that he knew and had all the cards of what was going on in the I want to say Kremlin, which is probably a Freudian slip, but true. Anyway, we had a man inside the Kremlin. God, I can't say it today. But we knew that only about 20% of their nuclear force was ready to go. They had huge problems. Most of their missiles would have blown up in the silos. They still would have given us a nasty, nasty beginning to Third World War. While our missiles were about 80% ready to go, and we had B-52s in the air. They had a lot of airplanes that were stuck without parts. They had a bunch of other stuff, and we'd kind of seen this coming. And I talk about this occasionally, but we knew a great deal about what was going on because a very smart guy in the CIA started to see that there were no car batteries in the entire country. And what was going on was the Kremlin was putting together, I said it right that time, was making sure that all of their diesel submarines had a few of their nuclear submarines had brand new batteries so that they'd have the most time available underwater. But they'd basically taken all the car battery style production and put it into re-putting brand new batteries in every single submarine they had. And they were, that kind of raised a red flag about 60 or 90 days before this started happening. But anyway, we had somebody in the Kremlin that told us everything that was going on. And most of those guys in Russia knew that if they got in a war, they were going to face 100% total annihilation. So always good to be able to play poker with somebody when you can see all their cards and they cannot see yours. They, of course, knew a great deal what was going on here in this country. And probably not bad that they knew that about 80% of our missiles would go bang if we asked them to. So not everybody likes to make it a lot bigger deal than it was. I think it still was a big deal, but Kennedy was so great at doing all this. Well, I think he had some absolutely killer intelligence that allowed him to do that. He wasn't just playing with humans' lives. He knew what was going on, and a early victory for the CIA, where you normally don't hear a lot of things when they do extremely well. You only hear when they fail for a great deal. Pretty horrible human beings for what they did, the Kennedys. I mean, in their personal life, let me put it that way. What can you say? Anyway, very interesting. Of course, my dad, later in his life, of course, was a colonel in the Air Force, told me a little bit about what was going on at the time. Probably was still top secret, but who knows? He was starting to lose his mental faculties at the end and told me a great deal about what was happening, at least from what he'd seen. And during this missile crisis, he was called back because he built some of the original silos across the Midwest. We were living in Hawaii at the time. And, of course, I was 2 years old. I had no idea what was going on, so I only learned this later in life. But he'd been called back to make sure that all the, since he had built a lot of the missile silos in the mid-'50s and late 50s, called back to go back and look at all of those. And, of course, he was flying a variant of the U-2 at the time, so who knows what else he was called to do. He didn't fly over Cuba, though. I asked him that. But he did show me the little pins and pills to commit suicide if he was downed, which he still had, never gave back. A little black pill and a little pin that you pulled out to stick yourself with to kill yourself in case the Ruskies grabbed you. Anyway, interesting day today in 1962. Of course, I was starting to go short earlier this morning, and one of the reasons why was Kramer said that it was all clear. And sometimes the guy on CNBC is your best friend when you look at him as a KGB agent that you know is either stupid or just can't help always spouting that we're out of trouble. I took it as a sign that it was probably the great time to go short. All the indicators lined up. And much like a few weeks ago when I said that the people giving Fleckenstein a hard time about not going long and being wrong, I kind of took this as a sign. And all the way into noontime, the traders on CNBC saying that this market could only go up, and what else could they buy? I think the problem is, and I don't know if these guys are truly stupid, they never learned, or they're liars, but it's tough for me to understand. When I say I'm bearish or when I'm saying bullish, that basically means that I think that at any one time, let's say the S&P could go up. If I'm bearish, I'm thinking that the S&P could still go up another 20 points, but it could go down 100 points. And so I am bearish. I'm always looking at the asymmetrical trade out there, not whether I could be 20 points wrong, but whether I could be 100 points right. And all these guys care about is if they could be long and if they could get 10 more points on the upside. There's never any risk. There's never anything because about 75% of the time they're going to be right. That has nothing to do with how much money they have at the end of the year. And that is when you're right and you're short, you make a gob of money like we did in the last few weeks. When you're long and you're right at the bottom, like March 2009 lows that we've spoke about, you also have a huge amount of money. But I'm waiting for huge signals to go long, like March of 2009, and these guys don't care about what they make the next few days, like they're working for hourly wages. And I think if anything that I could ever get through to a new and budding trader is that the asymmetrical trade, i.e. making a absolute huge amounts of money, is more than important than walking away with a few shekels every day. Unfortunately, most people, it takes years to figure out that betting on the fluctuations can be a living. But actually betting on inevitable advances and declines is life-changing. And maybe you could look at that. I always recommend 3 books to new traders, and especially people that want me to tutor them. I give them the 3 books. I tell them to read all of them. Invariably, they read none of them and still want me to tell them what's going on. Until they read those 3 books, I never give them a lot of help. Because until they read those 3 books, they won't understand, for the most part, the way I think psychologically, the way I think as far as statistically, and the way that I think historically. When we come back, we'll talk about those 3 books, and we'll get into some other ones. But yay, Kramer! Maybe pick yet another top for me.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I had a question, and you can always either email me at path@tfnn.com. You can post a message in the den, or you can call us at 877-927-6648. I have an email question. Are 3 books in Audible I hate to read? From Bill. Bill never really tells me where he's from, though. He needs to tell me. If you email me, just tell me, of course, your first name and where you're calling, where you're emailing from. We'd like to know where our customers are. Anyway, one of those, I think the books that I really like, of course, is Fooled by Randomness. I think that's on audiobook. The other one is Trading in the Zone by Mark, was it Wilson? I'll look it up during the break. It's Larry Pesavento's buddy who lives right across the street from him. And the last one, of course, is Reminiscence of a Stock Operator, which I'm in the process of doing an audiobook of. So you'll be able to get it with my voice out here. Maybe we'll play it, a small little segment here next, coming back from maybe the break at the very end. But already starting to record it, and I'll probably get a little bit better at reading. But anyway, all 3 books very good and well worth reading. Apple's CEO quietly, without telling anybody, has been meeting with the Chinese vice minister and asking him why the entire country is trying to break his iCloud. I'm wondering, I would love to be a fly on the wall for that one, wouldn't you? Yeah, okay, Mr. Communist. Why are you doing everything in the world to break our cloud system and try to hack everybody's phone number and zip code and everything else that you can get? Quietly discussed by about a minute on their Chi-Com news outlet overnight, or during the day. But unclear if Tim Cook was able to do anything. I think he's going to figure out the same thing that Google did, and that is if you are an American trying to do business over there, you better pay off the right people, and even then, they will just take you to the cleaners. Probably not worth trying to do business over there. We should probably have a much better trade policy with them until they quit acting like jackasses. But certainly very interesting. But yes, the big one-man thing. Have just a cautionary tale. Do I have enough time? I guess I do. And my claim to fame came in a company where we made many products. And the most successful of those products were because of somebody else's product. Now, they went out and oversold that product. They basically said it's only going to take one man now in his basement to make the next Gone with the Wind and Citizen Kane, and one guy with a camcorder is going to be able to do it all. Basically, they were saying that it wouldn't take a cast of thousands, and it wouldn't take people that knew how to write scripts, and people who knew how to do lighting and boom operators and all the other stuff out there. Kind of a maybe 10, 15 years predecessor or an idea that people would be making videos that would be popular, like on YouTube. But basically, they thought everybody would be making small movies and documentaries, and the idea, and they way oversold it. It was still going to cost about, they said you could start doing it for $5,000. In reality, it would probably taken about $15,000 to $20,000. But today, when we look at companies like 3D Systems that are getting hammered, it's very easy to get sucked into the hype. Interestingly enough, the two gentlemen that were running that company, one was a guy that I knew from the Electronic Art days, and he was steeped with Trip Hawkins from EA at that time to basically the same kind of ideas that Apple has and has had for the last 30 years, that kind of belief. That if they could just be outrageous, if they could just manipulate the press long enough, that they would get what they want, that they could control the media. A lot of that came from the works of the Nazis, where they were working on propaganda. They picked up the mantle. The problem is that when you lie to yourself, eventually you start really starting to believe it. Anyway, he ended his life by blowing his heart up by doing massive amounts of cocaine. And I always think about that. You have to be true to yourself. And I think that even more, if you are a stock trader, you better be honest with yourself. We'll be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're about 20 points off the high of day already at 1930 on the S&P cash, about 2.5 billion shares, down 10 points from yesterday on the S&P cash. Had some people email me during the break. If you want links to those 3 books, just email me at path@tfnn.com. We're going to get into some confluence zones, which I spent, I don't know, I got about 5 hours worth of sleep last night, so I'll probably go to bed early. I wanted to see, especially after the move yesterday that got up to the retrace, pretty much where we were looking for, that I thought this morning it would be probably behoove me to start looking at patterns. We're going to look at a few of them out here. And if you're new to TFNN, how you put trades together. I did put out a couple of short positions this morning, and one and an additional one in the Tech Insider. And think that we probably have a fairly decent entry point out here. We talked earlier this week in Confluence about Fibonacci numbers. And for those people new to Confluence, basically it is 2 Fibonacci moves, sharing at least, basically sharing 1 point, i.e. a bigger time frame and a smaller time frame. And if the difference between the 382 of one and the 618 retrace of another is extremely small, and it's over a fairly long amount of time, it becomes extremely good either support or resistance. In the case of coming down and bouncing it off the first time like it did the IWM, normally you're going to get a fairly decent bounce, at least on price. If the volume is not good, look for it to come back down, and the next time it hits it, pretty good idea if the volume is increasing as it comes back down, it will blow through it. At this point, though, I've been looking for positions to short. And I'm showing Kamiko right now just because, for the most part, you don't want to be shorting the small caps because they've already been beaten down and taken, pretty much completed an ABC down. You want to be looking and seeing where these confluences levels lie to get your next position. If you do want to short them, I wouldn't be shorting CCJ. I think there are a great deal of companies that are much better out here. If you are long stocks, you want to be looking and thinking about where the level is, where you're going to find a great deal of pain. And in the case of the Boeing company I'm showing you now, the long-term moves off of Confluence start with the November 7th low at 69.30 of 2012, the June 24th low at in 2013 at $96.31. Now, the number that is shared by both of them, what they call the fib node, and actually if you go back and hover over it with the Art of Timing the Trade charts and click on it, you'll see it says as the focus number. That terminology comes from the book about confluence numbers from Joe DiNapoli. But I think for, a fourth of the price, probably handled exceptionally well by Tom O'Brien's book, The Art of Timing the Trade. But what you get out of that is a fairly narrow range, about $1 wide at about a 114.75 to 115.82, and that gives you just a wonderful way of putting your back to the wall. So if you thought that you would like to buy Boeing, that's probably one of the few places that you could buy it and have a very narrow risk reward. At the same time, if you're thinking about shorting a stock, you want to see how much farther down you would be to that first support level. There's a couple of gaps at that level. We see very good confluence, and if I was trying to make a projection out here, it certainly would look something like that. Now, let's say that you wanted to go short. Now, I picked a couple of stocks that I think are probably just a little bit better than the ones I'm going to show you today to pull shorts out on this morning. But you want to make sure that there's enough downside before you have to at least bounce once and live through a fairly major retrace as we have over the last week that probably would fry just about anybody if they had to sit through it. But what we have in AIG, I think, is a teachable moment here, and that is a fairly decent level of confluence. And if you're watching on Tiger TV, you'll see that basically the first fib position I'm looking at is the November 14th low of 2012 at $30.64. The next one comes in at $41.53 from June 24th at $41.53. That sets up, if you use the all-time high up here at September 19th of 2014 at 56.56, sets up your basically the parameters for confluence. In this case, that would set your confluence level at 47.27 to 46.86. Fairly tight, 40-60 cents, something like that. You don't run it really. A lot of times it will go below it and then close back above it. But if you want to go long, normally that's where you want to get it. Now, if you are going short, what you would like to see is how could it get to that $47 level. And in this case, what you want to be looking at is, did it do an ABC or the beginning of an ABC? And I think you can make a good case that this thing is doing an ABC. So we'll go ahead and look at expansions. And if you see that I popped that right up, basically AIG has done basically a 50% retracement out here today. There was no energy off this low. In fact, pretty light volume in the last 2 days as it came back up. So you got a 50% movement basically from the top of today. But where would that take you? That would take you to $44.47 on a 1-to-1 ABC on the downside. Of course, when we go back and look at the move down in the retracements, let's go back to that real quick. One more, I guess. That would only be $47. So if you were looking for an ABC on this thing, there are two major lows at around $47. There's confluence at $47. A lot of time when you set these up, there's going to be a gap. And that gap's probably going to come at $47. So when you look at that ABC projection, you're probably going to say, if it got to $47, I would probably have to take my money. The question is, would you take a trade out from today's high down to $47, or is there better fish in the sea? And when, like I said, when I'm always looking at these, I'm always trying to figure out, okay, how far down is down? To me, this is an excellent example of how to set up a trade. I just didn't see enough meat on the bone to come out here and look at it. But I digress. What else do we have going on here? We talked about Boeing, CCJ. There are a bunch of these stocks out here that are doing it. Let's take a look at Garmin. Here's a good example of setting up long-term Fibonacci confluence levels. Now, we went up to a high, kind of blew off, had some movement out here. The stock came back to this big gap that started on February 19th of 2014. You popped up on, 9.4 million shares. You got back into it with 5.5 million shares. But at the same point, everything below about $50 on this thing was below confluence. So you got about $1.50 out here. It's not, like I said, uncommon to see these things maybe go through a day or two on the downside of these confluences. But if you were short this thing, you'd probably want to have covered it at that $50 level. If you thought that you were going to play it for a bounce, then you would have wanted to see it close back above $50.30 where the confluence level is. And now it's up 50% from the retrace. If you're thinking that this thing is now going to gain a bunch of energy and head back down, you would want to be looking at a possible ABC in this thing. As we look at it, let's see if we go a little shorter term. A possible ABC, let's see what we have out here. See if we can get this down. We have kind of a huge intraday movement out here on the 30th of, 30th of July. But I'm going to say that my A point is July 3rd, it's $62.05. My October 2nd low at 48.67 is my B point. My C point would be today. You got a screaming doji out here. Now the question is, how did it come up? Did it come up with decent volume? Last couple of days kind of light. But if you do have an ABC, then you've got to move to $41.65. So let's go back and look at this. What's out there at $41, but a huge gap that's been open for a while. Not a huge gap, but a big, nice gap. Where this thing gapped up on the, September 3rd of 2013. So about a year ago. Big volume, no. 1.8 million shares. But you've got a gap there. You've got an ABC projection there. You've got a company that's problematic at best in the long-term future because everything's got a GPS chip in it now. No one's really buying a lot of it. The cars come with it. All the airlines have already switched over to iPads with their software. Just how much is there left for a company like Garmin? And that question is, one day they're just going to say something, and it's going to be like Netflix. You get the huge move down. I think this has been in a huge distribution level probably for the last 6 months. And the question is, when does the music stop on this thing? But I would suggest that if you thought that this was an ABC, that the market was moving down, you're looking at that $41 level. And that's kind of trying to put those things together. An ABC, Confluence, expansions, all together. And again, looking at Confluence is an interesting way to look at these. What else do I have out here that I thought was interesting? RXL. Is that it? 2 years, 1 year, 2 years, 3 years, maybe? No. Let's see what else I wanted to look. Oh, I wanted to look at ACAT. Again, if you're wanting to go short, one of the things that you would like to do, of course, is figure out exactly where your Confluence and retrace levels would be. And of course, you want to think about the longer-term ones. A lot of times you're going to get shorter-term ones, and this is a good example in Arctic Cat. This thing has come back down. The volume came out of just about everything below $31.95 from that May 15th low. If you're thinking this kind of business is going to go south, it's back into the trading range. What would you like to do? I always try, if I can find a nice Confluence level that's very narrow, I would much rather wait for this thing to bounce back up to about 41.93 to 42.87, where you have a good range of Confluence that's just above the July 1st high out here. So maybe you get a bounce back into that level, but at that point, your risk reward's going to get fairly good, opposed to now where you're hoping that it makes one more ABC down. I would much rather see a counter move, all the volume come out, it squeeze and get rid of all the shorts, and then you set back up for a nice move in here. Same thing with a lot of these clothiers from retail mall clothiers. In the case we're watching here, Air Special, and that is an interesting one because, of course, one, you probably wouldn't short it. But let's say that I was bullish out here, which I am not. Some of these clothiers, if they're going to bounce, where would be a logical, and you were bullish, where would be the logical place to take your cash? Now, this thing gapped down with monstrous volume on the 14th of March of this year. Huge volume, 37.4 million shares. And, of course, that gap is open. If this thing was going to do a little bit of reversal, things changed out. It would not be on the scope of reason to think that it would go up and try to at least get close to this gap again that happened on that date. What you do have, though, is a beautiful Fibonacci Confluence level between $5.78 and $5.83. Now, if I had the choice of taking my cash in the gap or at this Confluence level, I would certainly, but it is interesting. Anyway, give me a call, 877-927-6648, 877-927-6648. But you always want to look at the counterfactual. And in this case, you're not going to short a $2 stock. But if things were going to get better in this arena, where would you look for it to go? $5.83.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I am working on a audio version of Reminiscence of a Stock Operator. I thought I'd play just a little clip for you here. And going to be working on a book about the history of the stock market and what we can learn from Jesse Livermore and other people in writing. So I've been digging up a lot of old recordings and interviews and newspapers about what they were writing about at the time. But this is an interesting clip. I think it's the end of chapter 3. But interesting, Jesse Livermore's 22 years old and has been trading for a living since he's 15 years old. And he's finally figuring out slowly that trading for a moment and making short money is nothing like it is for trading for the big bucks. And he's had a little setback, as it were. But listen to this clip, and then we'll get back into a chart. I had made and lost a $10,000 stake more than once. In New York, I had thousands and lost them. I got up to $50,000, and 2 days later that went. I had no other business and knew no other game. After several years, I was back where I began. No worse, for I had acquired habits and a style of living that required money, though that part didn't bother me as much as being wrong so consistently. And I think he basically talks a great deal about his change from being a trader in the bucket shops and why things had to change, and they did. And he became probably the best trader in the world, why he was not horribly manic depressive. We think about today all the wonderful drugs, but if they would have had the drugs then that they have today, I have a feeling he would have owned the entire world. When he was depressive, he could throw all his cash away in no matter of all. But anyway, we'll be having that. Hopefully I'll have it out by Christmas. I'm going to be leaving, I think, about the 15th of December. And I'm also going to be working on some stuff for you to listen through and episodes about some big ideas during the last half of the month of December, where I'm going to take my vacation. But I'm going to work on what we can learn from Jesse Livermore and other people and kind of wrap it up. So look forward to a little Christmas present here when there probably is not going to be a lot of stocks moving, but maybe it'll be a good time for you to learn something from us at TFNN. Anyway, I wanted to look at this one last stock before we go, and that is Genuine Parts Company. It is breaking out above its previous high. You needed 1.9 million shares. You got about 1 million shares yesterday. You got about 438,000 shares today. Now, you go, okay, I'm looking at this. Looks interesting, but guess what? Because of the way this thing's all set up, would this thing blow out the first time down? The answer is probably not. You've got some fairly decent confluence at about $57, just underneath it, actually. What is it? 86.53 to 86.55. Yeah, like 2 cents. So a wonderful confluence level. Unfortunately, that's $3 down from what you got now, and you know, you want to be thinking, especially with the way the market's set up right now. Confluence levels are not always set up, but they are set up right now. You can always go and get a 30-day subscription to my newsletter for $30 right now. The best deal we've ever made for it. So go to the front page of TFNN and check that out. I've got probably 38 pages of confluence charts in it this morning, and I think you'd be well worth looking at. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.